Hello, everybody. My name is Matt Baker with DS Benefits Group. I'm one of the consultants here at the firm, and I have with me Dustin Fowkes, who is the project manager and benefit analyst who works with our clients on the self-funded side of our business. We have been doing a lot of videos discussing organizational development, some HR consulting practices, as well as some fully insured issues that are going out there with our smaller groups. But what we wanted to touch on today was how some of our larger groups are coping with the situation and some of the changes that are coming about due to the COVID-19 and being at home and working remote. And I wanted to bring in Dustin to have that conversation with you, as he is the expert here at our firm and well respected in the industry. So Dustin, thank you for being here today. Really appreciate it.
My pleasure. I appreciate you having me, Matt, and I'm looking forward to our conversation.
Great. Thanks, Dustin. Well, let's jump right into it. We kind of make these short and quick so everybody gets to see these, gets a good bit of information, and they can reach out to us afterwards or move on with their day or give us a buzz. So one of the things we've heard a lot from carriers recently regarding the coverage of COVID-19 related to testing and treatment, specifically as it relates to member cost share. So with fully insured plans, they aren't being given an option and they must comply with the carrier standard approach, which has been to waive cost share. Self-funded groups, however, have a bit more flexibility. Is that correct?
Yeah, Matt, that's absolutely correct. So employers with self-funded plans have much more control over the design of their plans. There are still some federal mandates that they must comply with, but many of the other plan changes and designs are left up to their discretion. So you mentioned coverage of COVID-19 diagnostic testing compared to coverage of COVID-19 related treatment, which is a perfect example. The Families First Coronavirus Response Act mandates that all plans, whether fully insured or self-funded, ERISA or non-ERISA, waive member cost sharing for all approved and authorized COVID-19 testing, and likely the antibody testing that is currently being discussed, as well as any costs related to those visits for testing specifically. However, waiving the cost share for the treatment of COVID-19 is not federally mandated. So self-funded plans have the option as to whether they waive member cost share for these services and pay them at 100% as the employer, or continue allowing these services to be processed under the plan like any other condition or treatment would be. We've had discussions with many of our clients, and a lot of them have opted to not waive the cost share requirement for various reasons, but primarily because they're focusing on maintaining the financial health of the company during this period.
Great. I think that's a great point. That's a big difference between the small and large group. Still having the ability to make those decisions on your own versus the carriers kind of dictating how that treatment is going to be done or how it's being covered. So that's a huge difference between the small fully insured plans and the larger self-funded companies. So speaking of which, how are furloughs and layoffs being handled by these plans? Are there any nuances companies should be aware of at this time?
Unfortunately, we are seeing many more of these situations as our clients are attempting to balance that long-term financial stability I mentioned, as well as the short-term impact to both them and their employees. The overall message as it relates to continuation of benefits and benefit eligibility during these difficult times is that as long as premiums are being paid on the member's behalf, benefits can continue. There are, however, a few nuances that employers should be aware of. From a medical standpoint, self-funded plans pay administrative fees and stop-loss rates, not a fully insured premium per se. And at this time, there are no state mandates for the allowances or deferral of these fees available, as there are for fully insured employers and the premiums that they pay. So self-funded employers must continue to pay the administrative fees for most ASOs and TPAs in the marketplace in order to ensure timely processing of claims for their plan. There could be a a payment deferral available for stop loss policies in Ohio, but employers would want to check with us as well as their stop loss carriers to determine the availability and any specific terms for those deferrals, such as a delay in a claim reimbursement if someone should reach the spec level. Switching to member eligibility, groups are going to want to refer to their plan documents. A plan can allow for the continuation of coverage under an approved leave or layoff up to a specific amount of time, as long as employer contributions are being made during that period or up on that employee returning to active work status. An employer should check the terms of eligibility within each of their benefit plans and amend if necessary to accommodate how they want to cover eligible employees during a furlough or layoff, especially during this time and during this pandemic. Flipping to ancillary coverage, it's a little bit more straightforward because most of those lines of coverage are fully insured. And for those fully insured lines, most of the carriers that we have talked to are allowing for the continuation of coverage for a specific period of time for those that are impacted via a furlough or a layoff, again, as long as premium payments are being received. Carriers will still consider those temporary laid off, furloughed, on leave, or even working reduced hours as actively at work for the purposes of coverage without amending the plan. Now, if a situation were to extend beyond the exceptions the carriers have put in place, then a member would have to look into the conversion and portability options, taking COBRA, or even moving onto a spouse's plan when available for lines such as dental and vision. There are some lines, ancillary lines, such as dental and short-term disability, that can be self-funded, and short-term disability in particular, has an actively at work requirement for eligibility. And this means that an employee on layoff or furlough would not be eligible for the benefit. But if they are already on an approved leave, the benefit would continue under the terms of the plan. So similar to self-funded medical plans, employers would want to reference their plan documents if they have a self-funded dental or short-term disability plan and amend it accordingly for continuation of coverage. It is very important, though, that any employer consult with their legal counsel before they continue any type of layoff or furlough of an employee that is already currently out on an approved disability leave.
Great. Well, that's a lot of information. So it's very detailed. Really appreciate that. If any of you have any questions on the items that Dustin is talking about, whether it's the COVID-19, if you're self-insured or self-funded, and how that works in your plan, along with the furloughs, please reach out to Dustin and I. We are available. Our whole team is working remote, and we're here for our clients, here for companies who are just looking for some guidance, always here and happy to help. You can find us at www.dsbenefitsgroup.com. Our contact information is there. Dustin, I really appreciate your time today and all this information. You know, are there any final thoughts that you want to leave folks with as we conclude today's session?
Yeah, absolutely, Matt. I know that there's a lot of information and a lot of detail that we've shared. The main takeaway that I want employers to have from this is all groups really need to ensure that their plan documents are up to date and that they reflect the intent of any changes that they are going to be making, especially related to COVID-19 coverage and employee eligibility in the instance of a furlough or a layoff. They need to be working with their consultants to confirm, both with us as well as their insurance carriers, if their plan may need an amendment to allow for some of these exceptions. In the instance that they have something carved out, such as stop loss, they also want to ensure that they check with their stop loss carrier before making any changes to their medical plans, because they want to ensure that their stop loss carrier agrees with those changes and will cover those services and those plan participants. Because without doing so, they expose themselves to what could be some significant financial risk.
Great. Well, Dustin, thank you again for being here and joining us today. I know you're working a lot with our self-funded clients to help them manage through this process. And again, thank you all for watching. If you have questions that come up regarding the information covered today, or if there are topics that we have not covered that you have questions on, we would be happy to create more educational videos to help you get through this situation we're on. So thank you all for watching. Please stay safe and healthy.